Well, thank you so much, Angeline, for inviting me to present at the Microloan conference today. I also like to send a special thank you to Jamie Oddister and also Warren Galloway for this opportunity to come and present to you guys today. And so I have the awesome opportunity to talk to you today about bookkeeping basics for entrepreneurs. And I believe the reason why they invited me to talk about this topic because it is one that's very near and dear to my heart. Welcome in. Make sure you grab a handout and a pencil. This is a topic that's very near and dear to my heart, so much so that I'm excited to share that I wrote a book called Bookkeeping for Business Owners, Gaining Clarity and Confidence Without the Overwhelm. It is set to release in January. So whoop, 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 you'll hear more about that. And the beautiful thing about it is that I'm excited to share some of the nuggets and strategies with you that I put in that book because they're so important, right? Because how many of you truly believe that getting clarity in your books really means confidence in your business? Yes, it absolutely does. And for those of you who may not be there yet, hopefully after today's session, you'll have a better insight with regard to how clarity in your books will mean confidence in your business. I am the founder and CEO, Chief Tax Strategist of Tried and True Financial Services, where we was established in 2015 to educate service-based entrepreneurs on the ABCs of finance. And those ABCs of finance represent these three interconnected pillars: advisory, bookkeeping, and compliance. Advisory from the standpoint of year-round tax strategy, right? So that you can receive that proactive guidance. It's not a transactional one time a year, it's time to get my taxes done, but it's really that year-round strategy. That's the advisory piece to make sure that you can keep more of your hard-earned dollars in your own pocket so you can save money, maximize your tax deductions. And then the bookkeeping piece, which is the foundation of everything that you do in your business. Me and David was just talking. He's going to be presenting a little bit later on about crowdfunding. And he said it best. If you're not doing bookkeeping in your business, you're not running an effective business. Like, you got to do it. It's not optional. It's just not optional. It's the foundation of everything. And clean, consistent, and accurate numbers is really going to put you in a position where you understand the health of your business, and then you can make some strategic financial decisions. And then compliance from the standpoint of making sure that you're meeting your regulatory requirements, you're paying your quarterly estimated taxes on time. We're going to talk about some strategies in order for you to be able to do that effectively, and kind of just making sure that you're keeping your financials ready so that when a lender asks you for your financials, for your documents, at the drop of a hat, you're like, oh, yep, let me click this button and produce my financials so that I can go ahead and get this process going, all right? And so as we move along, again, as I mentioned, bookkeeping is the foundation of everything. You kind of want to make sure that you know your numbers, right? And that you can produce those critical financial statements, like I said, at the drop of a hat. It's not just about making sure that, that you can keep track of your data, but it's truly about knowing what you have coming in, what income is coming in, and where it's going. I can't tell you how many times I speak with entrepreneurs and they're like, yeah, I see this says I made X amount of dollars. I don't know where it went. Well, because you're not using a bookkeeping system and looking at your financials on a regular and consistent basis, because you would know exactly where it went. All right? So when you know your numbers, you truly do know your business, okay? And these three financial statements that's listed here are the critical financial statements that at the click of a button, you can produce out of your accounting system, which we're about to talk about, that you can produce out of your accounting system at the drop of a hat. Your profit and loss statement, your balance sheet, and your cash flow statement. All three of these statements are the critical financial statements that when a lender asks you for your financials, they're going to want your tax returns. They're going to want your financials. These are the financials that they're referring to, okay? The profit and loss statement, the balance sheet, and the cash flow statement. Your profit and loss statement is going to show your income and your expenses, okay? Your income and your expenses over a period of time. So whether it's quarterly, semi-annually, or on an annual base, you can run your profit and loss statement. It's going to let you know, it's kind of like your business report card. It's going to let you know how well your business is doing. And then the balance sheet is going to show your assets, your liabilities, and then your owner's equity. Your assets meaning like when you run your balance sheet, you're going to see your banking, your savings and checking account show up on that balance sheet. When it talk about liabilities, you're going to see if you have any credit cards or if you have any loans or you have a building that you're purchasing. That's going to show up on your balance sheet in your asset section. And then your owner's equity. What have you infused into the building, into the business, or what have you taken out of the business? That's going to show on your balance sheet, and it's a snapshot on a particular date and time. Of course, that historical data that's in your system is going to feed into that balance sheet. So that's why it's important to make sure that you have accurate data over the course of time in your bookkeeping system, but that balance sheet is going to show you that snapshot as of that particular time. Don't go to sleep on me. Stay awake. And then you have your cash flow statement. That's another one of the financial statements. The cash flow statement is going to show what's coming in, what's going out. If you're a seasonal business, like for myself, we're a tax business. So yeah, in the first quarter of the year is our really busy time. If you're a landscaper, right, you may have the summer months where you're really, really busy and you see your income go up. But maybe if you're doing snow, you're pushing snow, it might stay up, right? But sometimes landscapers, their information, their income might go down in certain seasons. All right? And then let's talk about setting up your books for success. And we're about to get into it right here. You have your handouts, but talking about knowing your numbers and understanding your numbers, right? One of the things I often tell my clients is, well, first of all, before I get into these 4 points that I'm going to share with you today, one of the first things I tell my clients is when you first start your business and you get your business name, you get your EIN number, you go to the bank with your documents to say, hey, I want to open up a business bank account. At that very moment, you want to ask them for a business credit card as well. That's what I recommend, because that's going to help you further keep your personal and your business finances together. I know as small business owners, a lot of times we bootstrap. We use all of our own money to fund our business. We're using our money from our savings account. We're using our personal credit cards to fund our business. And then all that does is creates that commingling from the beginning. But if you have decent personal credit, what if they give you $500 or $1,000 or whatever, that's going to be the beginning of building your business credit. And I'm not going to go too much into building business credit because Shelly, who's on the program, she's going to talk specifically about building business credit. But that's one of the things I highly recommend. But one of the core strategies, and I talk about this in my book, is setting up your pots. Setting up pots. So this pots represents you setting up various pots for your money to go into. The P represents payroll or paying yourself, because you definitely want to pay yourself. You're not working for anybody else for free, right? You don't want to work for yourself for free. So you want to set up an account for your payroll or paying yourself. And then you also want to have your account for operating expenses. The O represents OPEX or operating expenses. So you have your account for operating expenses. The T, guess what the T stands for? Anybody can guess? Taxes. You definitely want to have that account set up for taxes, okay? And then the S is savings, because you definitely want to have a reserve set aside. With these 4 pots, that's going to help you manage your cash flow a whole lot better. So off of every $100 you make, and I'm just going to use, since we have 4 pots, I'm going to use 25% as an even round number, right? But obviously these percentages are going to be representative of your business and what it's going to take for you to manage your business well. But in these pots, you say 25%. So out of every $100 you make, you need to put $25 in your payroll account, $25 in your operating account, $25 in your tax account, and $25 in your savings account. So that when it's time to pay your quarterly estimated taxes, you have the money already set aside. You haven't spent it because it's all in this one big pot and you're just operating the business, or when it's time to pay yourself, there's nothing left because you spent everything on, you need to make sure that you have your business plan, that you have your strategic plan when you first start, and that you're sticking to that and you're not just running your business by the seat of your pants, right? And so these pots will help you manage your cash flow better so that when it's time to pay yourself, it's something there, or contractors or whomever you need to pay, right? It's something there. And then out of that operating account, your main business account, that's what you're paying your bills with, or buying your supplies with, or doing whatever you need to do to operate that business out of that OPEX account, all right? And then I want to talk to you about optimizing your chart of accounts. Now, this is where we're going to get into the bookkeeping aspect of it, optimizing your chart of accounts. Your chart of accounts is simply a list of accounts that lives in your bookkeeping system. So whether or not you're using Wave or Xero or QuickBooks Online, each one of them have a chart of accounts. And when you first set up that accounting system, it's going to ask you what type of business you run, and it's going to give you a default chart of accounts based on the type of business that you said you run. However, you do have the opportunity to adjust those, to tweak them. I always recommend, and you have in your package, a sample Schedule C. Since this is bookkeeping basics, we're going to flow off of the Schedule C. I know some of you may be a Schedule C taxed as an S Corp, or you may have a partnership, so you'll have a different tax form. But I always recommend to my clients that you mirror your chart of accounts in your bookkeeping system after your respective tax form. So on this tax form, in Part 2, you see a category for expenses. These expenses, this income is going to show up on your chart of accounts. The expenses is going to show up on your chart of accounts. Those balance sheet categories are going to show up on your chart of accounts. Assets, liabilities, owner's equity, all of those things are in your chart of accounts. So you should make sure that if you look at this Schedule C, a couple of the categories are advertising, insurance, legal and professional services. You see office expense. You want to make sure that these categories are showing up on your chart of accounts so that you can optimize your chart of accounts, so that when you produce your sample profit and loss sheet, your sample profit and loss statement that you have in your package, that these categories are going to show up and they're going to flow seamlessly. And when it's tax time, your accountant is going to love you. We're going to love you, all right? And you're going to be happy because you're going to be able to look at this and see exactly where your money is going, all right? So you want to optimize your chart of accounts. That's what we mean by optimizing your chart of accounts. Now, I said it earlier, but this profit and loss statement serves multiple purposes. It's going to be used to prepare your taxes, to make sure that you can file an accurate and timely tax return. It's also going to allow you to make some strategic financial decisions. And so since this profit and loss statement is not all about your taxes, you can also, like for instance, set up some subcategories on your chart of accounts. So on this tax form, it has advertising on line 8. Well, if you look at your sample profit and loss statement under advertising, you see website, you see social media ads, you see promotional items. All of these are forms of advertising that you can set in your chart of accounts as subcategories, so that when you need to make some strategic financial decisions, or you need to find out where did my money go, and you're like, oh, I spent $3,297 on social media ads. That wasn't the plan. I need to adjust that. If you're looking at your financials on a monthly and a quarterly base, you're going to be able to see that where your spending is going and then quickly shift or pivot based on your original goals and plans that you set up for the business. So that's what we mean about optimizing your chart of accounts. And then, one of my favorite things is you want to implement your monthly, this is one of our core strategies, your financial CPR. What is financial CPR? I'm so glad you asked. Financial CPR is making sure that you categorize, post, and reconcile your transactions on a monthly basis. A lot of times, and I get it, I know, one of the reasons, I hear it all the time, one of the reasons why people don't end up keeping up and staying consistent with their bookkeeping is because they feel overwhelmed. When they open up that software, they're like, what is all of this? Like, you see that dashboard, you see all of those widgets up there, and you're like, I don't know what that is, and I don't know what to do with all of that. So what does a confused mind do? Nothing. That's right. And so this is our way to help make it simplify, because we simplify the ABCs of finance. So this is one of the ways that I help my clients stay focused. All you need to do is do your financial CPR on a monthly basis. All I want you to do is focus on going in there, categorize your transactions, post your transactions, and reconcile your transactions, okay? And basically what that looks like is, once you connect, there's another misconception that once you connect your business accounts, because you're just connecting your business accounts, not your personal accounts, to your accounting system for your business, right? Once you connect your business accounts, and then you go ahead and you see your transactions sitting in that window, and you say, yep, okay. You see Amazon, you're like, yep, I bought something from Amazon. That's Amazon for $20. Okay. Yep, I bought some gas from Shell. Okay, Shell, okay. And that's it. And then you run your profit and loss statement, and you're like, what? This clearly is not right. It's not, something is wrong with this. Well, it's because you missed a critical step. A lot of people miss that critical step, that third step of reconciling their transactions on a monthly base. And what the reconciliation piece is, how many of people know what this is? Checkbook. I still write checks. How many of y'all still write checks? I do. I still write checks. Okay. But anyway, sometimes, this might be a forgotten art. But think about a checkbook, and think about back in the day, or even today, you write a check. You put the date on there, you write out who it's going to, you write out the amount, and then you flip to, and you sign it, you flip to the back, and you put the same data in your checkbook register. You put the date, I sent, today I send $20 to Amazon. Well, we ain't doing it like that, but yeah. On this date, and then you make a list of all the checks that you written. And then at the end of the month, when your statement comes in the mail, what do? You take that statement and you compare it to your checkbook register. I mean, how many of y'all used to do that part? We should have been doing that part. We should have been doing that part. You take the statement and you match it to your checkbook register. And oftentimes you will have to add in a couple of missed transactions, like the couple of pennies of interest that they gave you. Make sure you grab a handout and a pencil, sir, as you come in and take your seat. Thanks for joining us. You go ahead and you add those couple pennies of interest that they gave you. You go ahead and you add that monthly statement fee that they charged you that you didn't have in your checkbook register. Oh, and I forgot, I did use my debit card a couple of times, and I forgot to write that transaction down. Sometimes transactions get left and they get missed out. It's the same thing in your accounting system. Think of a checkbook when you're thinking about your financial CPR, okay? Make sure you're reconciling that. So at the end of the month, it's November 5th. Technology has improved tremendously. I'm already getting emails saying your statement is ready. Your statement is ready for October, right? But you make sure that you take that statement and match it to the activity that's in your accounting system so that you can reconcile your books, and then you completed that financial CPR step. And then after that is done, you can go ahead and perform your monthly and quarterly statement reviews. Yes, ma'am, Ms. Teresa?
You got good eyes.
I remember, I didn't see it. It was flipped
Okay,
around. I remember.
yeah.
My sister's name was Teresa, so.
Okay, I'm Therese.
Therese. Okay, I got a good friend named Therese, too. I get it right. Okay.
I have a question.
Yes, ma'am.
Do you have to use like QuickBooks? Can you like, if you're like starting out, can you do like Excel sheet, or do you recommend going in and setting up with QuickBooks?
So that's why I mentioned a couple of different accounting softwares. Wave they have a free plan to use that. I definitely recommend tapping into technology. I believe somebody's going to be here talking about AI. A couple of years ago, I did a TED Talk. It was about the future of things, how AI and VR is impacting whatever industry you was in. I'm in accounting, so I talked about it from an accounting standpoint. And one of the things I said in that TED Talk was, gone are the days of dropping off shoe boxes, receipts, and folders, folders full of receipts to your accountants. We're not doing that. We're working smarter and not harder. We have to lean into technology. AI is moving so fast, we can't continue using spreadsheets. So while I do have a monthly profit and loss statement on my website that I was recommending in 2026, I'm not recommending it anymore. But I did create it for my clients that didn't have an accounting system in place. We're not doing that anymore, y'all. We got to stay up to date with what's going on. So there's softwares that's available for free. Even Xero has a plan that's as low as $25 a month. And so when you first started your business, surely you sat down and counted the cost of what it was going to take you to run that business. It takes money to make money. So you do really have to allocate some money aside to be able to run and operate your business efficiently and effectively. These lenders don't want to see your spreadsheet. They don't want that. And not only that, if you're doing a spreadsheet, at best you can produce a profit and loss statement, but you're not producing a corresponding balance sheet. You're not producing a corresponding cash flow statement. You got to get into it and use the software. And if you don't know how and you're not comfortable, there's all types of resources. My friend Mia is here from Oakland Thrive. Oakland Thrive, you want to talk to her. This is about networking. You want to talk to her about some resources. If your finances are not quite there, there's all types of CDFIs, lenders that's here to talk about technical assistance, different types of programs that you can get in to help until you get to that stage where you can sustain and pay for your software. But software, your technology stack needs to be part of your budget. It does. So I hope that helps.
Excellent.
Okay, thank you. And then looking at these monthly and looking at your financial statements on a monthly and quarterly base. So after you've completed your financial CPR, you then want to add on a monthly base, at a minimum on a quarterly base, go and pull these reports and look at them. On these reports, if you're looking at this report, these dollar amounts that's on here in your accounting system, they show up as hyperlinks. And so you can simply click on this hyperlink and it's going to pull up a separate report that'll show you exactly how this number was gathered. Okay? And so you can click on that and say, hey, are all these transactions right? Because technology is great, but it's not perfect. So some things happen, especially after you've implemented your automation and you have your automation in place. Sometimes transactions end up in categories that they didn't belong in. And so you want to make sure you do that. And then also I want to point out on this profit and loss sheet, on the back, at the end of total expenses, there's a line that says uncategorized expense. After you've completed your monthly CPR, after you've completed your monthly CPR and you're reviewing your statements, you don't want to have uncategorized expense on your statements at all. Like, and especially not to the tune of $11,365. Where did that money go? Did it grow wings and fly out the window? Like, what happened? Where did it go? You want to make sure that you're categorizing all of your transactions and looking at this financial statement after you've completed your monthly CPR will help you to go back and say, oh, let me fine tune this, let me tweak this, let me add a little bit more sugar, that was too much salt. Like, you gotta go and you gotta really look at this. And then the other thing I wanna talk about while we're on this financial statement review is notice on the back of this profit and loss statement that this company is ending this period, this is a year, with $49,280. You have to show profitability. If you want funding, you have to show profitability. I mean, this my favorite cousin, your favorite cousin, if your ace boon coon, y'all used to take baths together. Y'all they come and ask you to borrow $5,000. And you know, cuz ain't got no job, ain't had no job. Are you loaning your favorite cousin $5,000? No, I was taught that you only loan what you can afford to give away. And guess what? These banks, these financial institutions are not in the business of giving away money. They do that through technical assistance or grants or things like that, but they're not just giving money away. They want to know that you can pay them their money back. Okay, and so they're going to want to look at, and that's the other thing about using a spreadsheet versus using your financial statements, because what do you think they're doing with these financial statements when you hand them over to them? They're scrubbing them, they're running ratios, they're running calculations, they're calculating your debt coverage service ratio, DCRS. They want to see that your DCRS is at least 1.5 or better. What does that mean? Your debt coverage service ratio. That basically means if you ask them for $100,000, and let's just say the monthly payment on that $100,000 is $1,000 a month. They want to see that you're bringing in at least a monthly net income of $1,500. That's a 1.5 multiple. They want to see that you're bringing in a net multiple of $1,500 in order to pay their $1,000 back. And so you can't do that showing a loss. Like a lot of us, you know, when we first started out, we end up, I'm going the wrong way. We end up operating at a loss. There's nothing wrong with that. This is a no judgment zone. All I'm saying is you're not constantly staying in business year after year operating at a loss. You have to get to the point where you're showing profitability, and that's what the lenders are looking for. Okay, I'm off my soapbox. I'm going on because hopefully anything else that's in me that I want to come out will come out later. All right, and then bookkeeping as your strategic advantage. We already talked about how bookkeeping really sets you up for tax planning by mirroring your chart of accounts after your tax form so that you can work with your accountant to make some strategic financial decisions, that you can maximize your deductions. You can take a look and see and make sure how much you have coming in. When is a good time to purchase that piece of equipment? Is that time now? Is that time in a couple of months? Is that time next year? You know, you can look at it and make sure that you're maximizing your strategy year round. And then knowing, well, I just talked about the strategic decision making, knowing which products are profitable. You want to be able to use those financial statements to set up your KPI dashboard, which is your key performance indicators. Which of your products are doing well and which are not? Because if you're doing something and it's not profitable, then maybe that's time to pivot and do something a little bit different. If you're making body butter, okay, and you're making lemongrass, you're making peppermint, you're making lavender, and you find out that the lemongrass really ain't selling as much as the peppermint and And you got to be able to look at your KPI dashboard. And again, the bookkeeping is the foundation of everything. You can't set up a KPI dashboard off of a spreadsheet. You can't set up a KPI dashboard off of a bank statement. We're not operating our businesses off of those types of modalities because we're trying to grow and scale and leave a legacy to our families. I'm sure at the core of the reason why each and every one of you started your business, it has something to do with something greater than yourself. And so in order to do that, we have to do things decently and in order. And then the reason why we're all here is to make sure that that we can gain access to the capital that we need. I had in my mind, I wanted to share earlier when I first started that, you know, there is a statistic, and it's up, if you Google it, you go on the SBA website, but they say that the average first of all, small businesses are the heartbeat of American society. It represents about 99% of the economy, the U.S. economy, small businesses, right? But small businesses often fail in the first 5 years, and it's often due to poor cash flow management, because you don't have a bookkeeping system in place, or lack of funding, because you can't get the funding because you don't have your bookkeeping system in place. It's the foundation of everything. In order to get the capital that you need, you got to have this in place so that you can have the confidence in knowing that all of your documents and your paperwork is in order, and you can walk in there saying, okay, what you need? Because I got it. What you need? Because I put the work in. What you need? Because I've been doing the right things. So you walk in with that confidence to get the capital that you need. All right, so let's do a little bit of moment of reflection. So you can just scribble this on your paper, on your notes. I'm not going to ask you to share, not unless you really just want to. I'm open to sharing, but I'm going to ask these. I have actually 6 questions here. Can you guys see this? Now, I'm going to read it. I'm going to read it off anyway. Okay, so this is a financial readiness reflection. And so I have 6 questions here, 5 questions, 100 points, 20 points each. The bonus question will give you an extra bonus points if you need to kind of make it up in some other areas. How many of y'all know when we was in school, we always was depending on those we needed that extra credit. We need that extra credit because that extra credit gonna give us the boost that we need to get us where we. So I got a little bit of extra credit in here for y'all. But I want you to answer this question to yourself, and then you can put your points on your paper. So, do you reconcile your banks regularly? Yes or no? It's not sometimes it's not gray, it's black and white. Do you do it? Yes or no? It's no judgment zone. If you do, give yourself 20 points. If you don't, 0. It's okay. Can you produce accurate financial statements on demand? On demand. Like if somebody asks you for can you give me a year-to-date September 2025 financial statement? Can you do it? Just like that. Yes or no? 20%, 20 points if you can, 0 if you can't. We ain't operating in the gray. Are your personal and business expenses separated? Yes or no? 20 points if yes, 0 if no. Now let's talk about this. Personal and business expenses. Let's clarify this. This is not a tax class. We're not talking about tax deductions and how to maximize, but I got to address this elephant in the room because I see this happening all the time in practice. Personal and business expenses, commingling. So as a business owner, you get up, you're a consultant. This is ABC Consultant. ABC Consultant gets up, goes out into the field. ABC Consultant has 3 appointments scheduled, one at 10, one at 1, and one at 3. So ABC Consultant was like, okay, I need my coffee before I talk to anybody. So ABC Consulting stops at Starbucks and get a cup of coffee and then pulls out that business card and uses that business card to buy their self a cup of coffee. That's not a business expense. It's not. I'm sorry, I know you're going to work, but that's no different than somebody who's receiving a W-2 stopping to get a cup of coffee on their way to work. That's not a business expense. That shouldn't show up on your business bank statement. All right? And then ABC Consult. If you're meeting with the clients over coffee to talk about business, now that's a business deduction, right? Same thing for lunch. ABC Consultant is out in the field. They know they're not going to be home till dinner time. I need a little snacky snack. Or ABC Consultant got to pick the kids up from school. And they're going to stop at McDonald's and get a little snack before dinner. And they're going to use the business card. No, 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 no. That's not a business expense. Now, if you're going to meet a client and sit down over lunch and talk about business, that's the business deduction, not just you stopping to grab something to eat. I know you working, I know you got to eat, but where's that pot for your personal expenses where you paying yourself? That's the money, that's the account that you want to use for your coffee and your lunch while you're out in the field working. Now, if you're traveling and you're more than 50 miles away from home and you need to get something to eat, well, it's not reasonable that you can go home and make your own coffee or grab you some lunch. So then that's travel expenses. That's travel, that's different. But when you around, your home zone, no. Okay, I'm going to keep going. Next question. Is your chart of accounts organized logically? Now, it don't necessarily have to be optimized like what we talked about already, but is it organized logically to where a lender can look at your profit and loss and make some sense of what's going on? Yes or no? Give yourself 20 points for yes, 0 for no. And do you track accounts receivables and accounts payables? Are you creating an invoice every time you perform a service for somebody, or are you just, even if you're a cash-based business, you still need to be generating an invoice so that you can track the income and how it came in? And your accounts payables? So if you got your annual insurance payment coming up, is that bill entered into your bookkeeping system that show up, or are you tracking your if you're on a retainer and you have a monthly payment that you have to make to your contractor, is that showing up on your accounts payable? Because it needs to be, especially if you have a contract. It needs to show your accounts receivable. 20 points for yes, 0 for no. And then the bonus question is your business profitable? Yes or no? And it's okay if it's not. That's why we're here today. Even if it's not, you're here today. You're one step ahead of the curve, because now you can talk to these lenders, find out sit in classes like this, find out what do I need to do to put myself in a better position, and what do these lenders want, so that I can go back and work on it and make sure that I can give them what they want. Now, in a few moments, I'm going to give you an opportunity to download a 30-minute month-end checklist. It's going to be a little checklist that's going to help you, keep your life in order so that you can make sure that you're doing what you need to do. You have to set aside some time to work on your business and not just in your business. So for me, I know that Fridays are my low productivity days. Like my brain, it starts going into weekend mode. So I set Friday as my professional development day. So I don't book appointments on Fridays. I don't meet with clients on Fridays. I use that time to catch up on any work I need to do, to sit down and do my financials, to sit down and do my social media marketing. Yeah, we all need help in certain areas, right? Okay. And so I use that time for that. But you're going to have an opportunity to get this 30-minute checklist. So what makes you lender ready as we wrap it up? And what makes you lender ready? Number one, clean financial statements. So they're going to ask you for at least 12, 24, maybe 3 years worth of financial statements. And what are your financial statements? Your financial statements are your financials, is your tax return, it's your profit and loss statement, it's your balance sheet, it's all of these things. And I also want to point out one thing. These 2 sample documents that I gave you, this is your Schedule C that goes along with your 1040, your tax return. At the top it says profit and loss from a business. And this says profit and loss, and it could say statement, but profit and loss statement. And a lot of times people will say, oh, well, if they don't have a bookkeeping system in place, oh, well, I have my profit and loss in my tax return. No, it's not the same. It's just a coincidence that they titled these two things the same thing, but these are not the same thing. Your financials are your 3 critical financial statements. This is part of your financial packet that goes with your tax return, but these two are not the same. So you definitely need both of those. And then you want to make sure that you're creating that separation of personal and business expenses. You want to have dedicated business accounts, dedicated credit cards to show professionalism, that you're a legit business and you're operating your business effectively. We just talked about that, keeping your personal, when the lenders get your business financials, they don't want to see your McDonald's purchases on your business bank statement. They're going to be like, oh, she playing. She not for real. Okay, and then consistent revenue and profitability, evidence of reliable streams of income and positive cash flow shows your ability to repay those loans. So you got to have that. And then your tax compliance and documentation, making sure that you filed your accurate tax returns on time, that you're paying your quarterly estimated income taxes. Who wants to loan you money when you owe the IRS? Because guess what? IRS, they the biggest gangsters known to man. They will go in your bank account and take your money. Who else can do that? Nobody but the good old federal. So you want to make sure that you're paying your quarterly estimated tax payments on time. And then you have those pots set up and setting that money aside. You're not spending every dollar that you get as soon as you get it, but you're being a good steward over what has been entrusted to your hands, and you're putting systems and automation in place to make your life easier, because who got time to think about all that? It's a lot. It is. It's a lot, but you got to put systems and automation in place to help you with that process. And we're here to help you. That's why we're here today. That's why we're here today. So I hope this information has been helpful for you. I hope I said something that triggered a light bulb moment in your mind. But if you would, this is your opportunity to get your month-end checklist. If you would this is a quick little survey. It's probably like 5 or 6 questions. If you wouldn't mind scanning that QR code with your phone, taking out your phone and scanning that QR code and giving me some feedback so that I know if this content is helpful for other people, or if I need to shift and pivot and do something different. Your honest feedback will really help me and help people that are coming behind you get the information that they need. All right, so I'll give you just a few moments to do that, and let me check my time. Yep, I'm right at 41 minutes, so I'm right on time. So I just have 2 more things that I want to share after you finish giving that quick little feedback. Thank you so much for your participation. Oh, go ahead. Yep. And then one more action that I want you to think about taking and consider as you walk away from this breakout session. What are our action plans? What is our action plan? What are we going to do? What do we need to do? Do we need to set up a dedicated business bank account? If we haven't done that already, let's do that. Okay? Maybe choose and implement a bookkeeping software. That's something that we might need to do. That's an action item that you can jot down in your notes to do after you leave today's session. Schedule your monthly CPR sessions. Put it on the calendar. Put it on the calendar. Mine's is on the calendar. I live by a calendar. If it ain't on my calendar, I'll be like, ooh, because I look at the calendar. Ooh, I got calendar-itis. I look at my calendar and my emails all day, every day. I'm trying to detox from it, but I can't. But it helps me. It helps me live an organized life. Make sure maybe your action plan is to completely separate your personal and your business finances so that you have good, accurate financials. You might want to gather your financial records and organize them. What are your 2 or 3 action steps that you want to walk away from today with? And then maybe you need to consult with a bookkeeper or an accountant. Once you scan this QR code, It's going to get you into our ecosystem. I'm happy to sit down and have a consultation with you about your specific situation and what you need help with and how I might be able to come alongside and partner with you to help you with that. And then you want to document your priorities and make sure that you commit to a SMART timeline, SMART goals. How many of you guys have heard about SMART goals? Yeah, we know about SMART goals. We want to make sure they're specific, measurable, attainable, relatable, and time-bound. Set up your SMART goals as you move forward. This carpet trying it, but I'm not gonna let this carpet trip me today. Okay?
Can you just go back to the QR code for the survey?
Yes, ma'am. Did you get it? Yep, ME checklist is their code. And then you're gonna get that checklist and you can print it out, scan it, keep it. And then the last thing I just wanna remind you as your path forward, remember your ABCs, remember the advisory, the bookkeeping and the compliance to all keeping clean books. Remember your POTS, remember your financial CPR, and all of this information, I detail it in depth in my book, which coming out in January, Bookkeeping for Business Owners, Gaining Clarity and Confidence Without the Overwhelm. And I'd love for you to join my VIP launch group so that I can keep you updated as far as what's going on, when we're going to have the book signing and things like that. So if you want to do that, you can scan that QR code to join the book launch list. And with that, that's all I have, but I would like to give you an opportunity. I know we had a couple of questions throughout, but is there any additional questions or concerns that I can address for you guys?
I'd love to have you come and fix my QuickBooks, but.
Okay.
Because, the problem that I guess I've had is I've worked with it for a number of years, but I don't do that monthly CPR.
Yeah,
And so it's just year over year compounding.
yeah,
I really work from the spreadsheet.
yeah,
And so I have an idea of what's happening,
yeah.
but then I look at my QuickBooks and I'm the one that is like,
Just,
yeah, no.
yeah,
I'm
yeah,
not gonna.
yeah.
But then I've worked with it though, because I had to work with a company that used QuickBooks.
Okay,
But I found even working there, it was just always such a nightmare.
yeah,
Because it was a small business.
yeah,
A lot of stuff not
yeah,
clear as to what category it
Yeah.
goes in and all that.
yeah,
So that is something, it's definitely on my list of things to do to
yeah.
open it back up and look at it.
Yeah, and sometimes you need a fresh start.
Yeah.
It's nothing wrong with taking a fresh start, for various reasons. That might be an option. But the reality of it is like I said with that balance sheet, even though it's as a specific date and time, it's really pulling in historical data. And so if things are not done right, you don't have accurate books.
Yeah.
And is it worth spending the time to do a cleanup? There are people that do cleanups that can get in there and dig into it and clean it up. Or do you want a fresh start? Those are options, and those are very valid options. So I definitely wouldn't mind having a conversation with you to make sure that you tap in, and if you fill those things out, I definitely will follow up with you. Those are Angeline cards. Yeah, but our information is there. Our website is on the form, and our contact information is on all of these things. So if you scan any of these QR codes, you're going to tap into our community. I call it the Tried and True Tribe.
Okay.
Yeah, and so we'll be able to help you.
Yeah, I will say though, I definitely agree with you on automating everything, because I feel like if you don't have it, it links to your bank.
Yeah,
So you have actual historical, accurate data. So then if you're bringing that to a lender, then they
Thanks,
know you're
David.
not cooking books,
yeah,
you know?
absolutely.
Yeah.
Absolutely. There's a lot of moving parts. And so getting that foundation, and that, a lot of times even early stage entrepreneurs say, oh, well, I don't have a lot going on right now. I don't know if this is a good time. It's the best time to do it, because when things start really rolling, you ain't got time to catch up and keep up with all of that. You need to keep moving. So setting that foundation early on, God bless you. setting that foundation early on is so very extremely important. So, yeah. Well, thank you all. Thank you. Thank you. Thank you all so much for joining us today. Thank you for your attention, and I look forward to staying connected.